What's up, everybody? Good morning. Welcome aboard to Trading with Bubba for Thursday, the 11th of January, 2024. And I don't know, the markets are kind of a challenger today. They're kind of whipping back and forth with no real direction, although they are somewhat lower. As we take a look at, the SPY, for example, there's been a lot of, fills and gaps in here. Here we are towards the upper end of an overbought position. Again, we'd probably look to be a seller of call spreads here on a daily basis using the 0 DTEs. The Qs themselves are also up again. We've seen these movements, and the markets continue to hover in this consolidation phase. And when you're looking at consolidation or congestion is very tough to trade. We continue to watch this action and look for opportunity, and unfortunately, the opportunities are not great. There's not an overabundance because there's a lack of real trade. If you look at the very short-term charts, you're not getting a lot of movements. You're not getting a lot of particular follow-through into the market, and I think that's one of the things that we have to look at. Okay, is where is the opportunity? Where is the potential follow through going to come? And that's what we don't really see right now. And I think that is something that you have to, again, it makes it more challenging when you don't get that kind of movement. Okay, and we can see as we go back to our overall charts. Okay, as we look at through the board. Apple, which we mentioned, might get a little bit of a bounce. And of course, whoops, I'm on the wrong chart here, though. Hold on, there's what I want. Okay, Apple. Okay, and here you can see down here at the range, trying to work its way back towards the mid-range. Look, if you're going to lean on Apple, I mean, personally, I wouldn't be trading or looking at Apple right in here. I would be just sitting here kind of watching it, waiting for it to make a move. I would think you'd look at it if it got back to about 188. To be a seller, at about 180 to be a buyer. Amazon has reached again the pinnacle. Here I'd look to be a seller of some call spreads. Again, you could use almost a 0 TEs because you can sell them for tomorrow. That would be something that I might be interested in looking at as we look at these charts here. Again, remember, we saw this action in coin, the straight up movement. Now we're down, and we're now finding a new area of consolidation down in these levels here. So now, coin has built a new level, a new base. Where do we do from here? I think you're looking at, about 140 to about 160. Up at 160, you'd look to be a seller. About 140, you'd look to be a buyer. I think these are the things that you have to, kind of put in your mind because, again, it's really not about what we think or what the news is. Because certainly we had a CPI number today, which was a total BS. But again, it's not the news, it's the reaction that you're looking to. And I think when you learn to react to markets and you learn to react to the news, you put yourself in a better position. Trying to forecast the news or how the markets are going to react to the news, I think is more of a fool's game. I think when you look at the market, you can see basically where they are and what they're trying to do. And I think when you look at, again, we have Meta up right now. Meta's overbought. It's up at the top end of the range. So the highest probability is that it will come down a little bit. Now, it doesn't mean that it's going to be bearish or that you build up a big short position. Remember, we're trading under different viewpoints here. We're trying to find where can we make or get the best advantage to the market. Sometimes it's by playing and being with the trend for a long period of time. Sometimes it's churning back and forth by using or selling premium back and forth. And, again, that is something that we want to make sure that we understand and look at, because as we look at, for example, go back to NVIDIA, which we've talked about for a couple of days. Now, this has been a little tougher. I mean, I've got 3 different trades on in NVIDIA right now. 2 of them are losers. One's a winner at the moment. Okay, they could all 3 be winners. They could all 3 be losers. They could split. But at the end, again, to me, the only trade I can make in NVIDIA right here is to the short side based on the parabolic move higher, based on what it's done and how it's going straight up. So I can only personally look at a potential short position here for the short period of time. And this is something that we always want to focus on, is where am I at within the overall market structure right now? And the market structure right now, for example, here is it's overbought, it's extremely extended, and there's a greater probability that it falls to the downside. Now, again, there's obviously never a guarantee that that's going to happen, but that's what we're watching. And we look at the SPYs again, we're at the upper end. So why I wouldn't want to be a buyer here into this market, because we haven't broken out of this consolidation phase yet. So until we break out and it shows me that there's going to be a potential rally or some continuation, there's no reason for me to try to get involved in this. And this is what you want to always focus on. Tesla, which is breaking to the downside. But now we see Tesla very much oversold. So I'd want to be long Tesla. So I don't have an opinion on an individual stock or market. All I'm doing is I'm taking whatever the stocks that I watch, and I'm looking to see, is there an opportunity for me to make money in that particular stock at whatever price you happen to be trading? Because what do I care? I'm not investing here. You remember, when you're investing, you shouldn't even be really looking at your stocks. You should be protected. But when you're trading, all you're trying to do is cultivate an edge at any point in the given market. Okay. So as we look at Tesla, the edge would be to be a buyer here, because the sellers are trying to take control, but they have sold a little bit too quickly. So we would say that this is probably a little bit oversold. Win, okay, is right back at the mean. Notice, remember we talked about it, that we would want to be a seller of call spreads the other day. Why? Because it was up at the top end of the range. All right, again, it seems it's simple, and it is simple. The hardest part is the part inside of your mind, right? The hardest part of trading is our mental capacity to see beyond what we think the news is saying, because news is not very good, and more often than not is already priced into the market. All right. So if the news is already priced into the market, then shouldn't we be willing to react to the market? Okay. And I think that is something that you have to recognize within yourself, is the ability to look at a market, look at a chart, whatever it happens to be, because again, it shouldn't be based on what I think or what the company is. It should be purely based on the overall price action that is created here. And that's what we're watching when we look at the different charts. Okay. And as we go back to XBI, remember the other day we said that we should be a seller of XBI. Okay. And sure enough, it went up to 95, and now it's back down to 89. So again, it's really more of a focus that you have to take as a trader. Okay. Because again, there's a tremendous difference, A, between investing and trading, and B, between swing or short-term trading, long-term trading. Because again, the shorter the time frame that you are using to trade with, the faster and more trade you should be making. The longer the time frame that you're trading, you should be using, you take the other side of the equation. You take less trades. So again, you have to decide, and that's part of your trading plan we've talked about a couple of times, is putting together a plan as to what you want to be. Because there is no right or wrong. There's actually a decision on how active do you want to be, okay? How active of a trader do you want to be? And if you want to be more active, okay, then you trade a shorter time frame. If you want to be less active, you trade a longer time frame, okay? The risk you take on the longer time frame is going to be more than you have to take on the shorter time frame. The potential profit can be bigger on the shorter time frame because you have the opportunity to allow those trades to run longer. Okay. So there's a whole, again, it's not just, well, they're going up, they're going down. It is a science of thinking about A, what you want to do, and B, where are, if we think of pressure points or points in a market, where should it slow down? Where should it stop? What should make it rise? And again, by looking and identifying levels of support and resistance, those are the things that will allow you better opportunity, and which is why we kind of look at them every day. Now, again, eventually we're going to break out of this ridiculous range that we're in, and we're going to get runners, and we're going to talk about different types of trades. But right now, because we have very little bit of a range, why should we talk about anything else but what is right in front of us? And I think that is the most important thing that we can do, is to keep ourselves in step with the marketplace and what the market is doing. What is the market telling me? What opportunities is the market giving to me? And I think when you recognize that, I think you find yourself in a much better spot. Okay. And so we look back, for example, Microsoft has been stuck in consolidation, and it finally is broken out. So now in a Microsoft, although it is very overbought, so what I'd be looking for though on a Microsoft is a pullback, probably let's say to 377 or so, 378. And again, there's a time that we don't know the exact number, but let's say 377. Okay. If it pulls back to 377 and it shows me that it can hold there, then I would look to be a buyer, either a buyer of calls, a buyer of stock, a seller of puts. There's a whole bunch of ways, again, I can then make the trade once I can establish the type of trade that I'm trying to make. Okay. And that, again, here's where we go into what is the type of trade I'm trying to make? What is the what opportunity is the market giving me? Okay. And right now, again, I'll go back to the spiders. Okay. The opportunity here is giving me an opportunity to sell the zero days expiration call spreads, because we are at resistance. So why else would I want to do anything else when this is clearly what the market is showing me right now? Okay. And the same thing goes for the Qs, right? The market had reached a over the top, up to the top end of the range. And so once again, this is what we'd like to do. And again, it doesn't matter. We don't really care direction wise. Certainly in the IWM, which is another index, but certainly now in IWM, well, hell, I would like to go and use the other side of the coin. I would like to sell put spreads in IWM. Why? Because that's where the market is. We are oversold in that market. So again, I want to take advantage, knowing that there should be some retracement to the mean. Okay, remember, we're playing a mathematical game here. Okay, that's really what trading is. No different than poker, gin, bridge, or backgammon, or things like that. We're playing a game that gives us opportunities. Okay, that can allow us to make give us the best opportunity to be successful. Okay, and if we can follow those numbers and we can follow the chart, then those should give us the highest probability trades. That by no way guarantees that particular trade is going to be a winner. Okay, but what we do want to do is give ourselves the opportunity always to make the best out of it and give ourselves the best trade that then gives us the greatest opportunity to be profitable. Okay, because again, as we look at the IWM, we can see very much oversold. The diamonds, let's see what the diamonds are doing. I haven't looked at those recently. They're not one that I regularly follow because they're very similar to the SPY. The diamonds are also up at the top end of the range. So once again, we see these potential opportunities that then bring us the opportunity to go ahead and take advantage of what the market structure is doing for us. Okay. And of course, the biggest one right now that I think is in place still is in NVIDIA. And of course, as we've been talking, NVIDIA was at 442. It's now 542. It's now 537. Now, that doesn't mean it's going to keep going down. All right. Again, but that's what we'd be looking for. And that would be our expectation. So that would be the trade that we would want to be set up for. Okay. And this is, again, always what we're trying to do is to be in position. Okay. Because as we look at the general charts, let's go back to the big picture here. Let's just see which one I screwed up so I can put the right chart back in there. Okay, that belongs there. Okay. So we can see right now you're getting a flush in the NASDAQ. You're getting a flush in all the indices right now. Okay. All right. So what do we do about it? Well, if you're trading short term, we might be looking to buy them. Okay. That would be something that would be very, very realistic is a potential spot to be a buyer right now. Okay. And again, this is what our job is. This is what our business is about, is again, identifying opportunities that show up. Okay. And if we can do that on a regular basis and we can put ourselves in a, what we would call a win rate area, we try to hit about 66% of our trades. Okay. Again, is that absolute? Do you have to? No, but we're trying to hit a high percentage number. Okay. Because that is what gives us, once again, the greatest opportunity for success is understanding what our win rate is, what we can do, where we can make money at, okay, and where we can also not only make money, but protect ourselves from losing money, right? Because the business itself, listen, there's ebbs and flows and profits and losses, and the objective is to limit the losses, to maximize the gains, and to keep yourself active enough when the time says to be active enough to give you the best opportunity to be successful. Okay. That is really what it looks like. So as we look back in here, and let's just take a look and see if there's anything that we want to do here. Now, certainly I would be willing to look at some of these trades here. The reason I'm not calling them out today is I'm having a little trouble with my software and I'm getting too much of distance in between. But normally I might be looking to buy these major indices. I might be a buyer of the S&P. Okay. I mean, I would call it, but again, I don't call trades that I don't make myself because I don't think that's right. I think that only what I would actually put my own money into. But those would be areas that I would be looking for. And I think that's something that you want to learn and start to recognize for yourself. So we're going to cut it a couple of minutes short. I got a very bad back and I'm having trouble sitting. So we're going to call it a little bit short, but I'll be back on Tuesday, hopefully back healthy. But keep an eye here. Market's a little tough and look to sell some premium for now until we can get a better market. In the meantime, have a great day, everybody. We'll see you back here on Tuesday.